Good afternoon, everyone. This is AJ with FBO Securities, bringing you a quick Friday recap as well as an end of the month recap and what a crazy week and month it has been. So the S&P closed up 1.56%, Nasdaq was up 1.58%, Magnificent Seven were up 1.94%, and even bonds were up 1.23%. Before we continue any further, this information is for educational and informational purposes only and should not be considered investment advice. So we were down quite a bit on the week. We were almost down close to 3.5%. And then, of course, after today's turnaround, even the markets today, S&P was down almost 50 bips. Then after, I think, some White House announcements and some other news, we had a pretty broad rally. So, we were kind of getting into a very oversold area that I mentioned yesterday in the video, and I'll show you where we actually bounced. And whatnot. So for the year now, S&P is up 1.63% and Nasdaq is still down 40 bips on the year. And IWM is down just under 3% for the year as well. So I kind of want to go over some monthly performance. And, if you see the best performing sectors for the month, KWeb, wait, okay, I'm recording. Sorry. KWeb was one of the better performing sectors for the month, as well as TLT, and of course we had some defensive sectors: XLP, SPLV, which is the low volatility ETF, XLE, and of course some gold miners and utilities and whatnot. And the worst performing sectors, of course, Bitcoin was down almost 18%. So. This was, I think it's entering into its bear market sort of territory. We saw a bounce. A little bit of a bounce today. Then ARC was down almost 12% on the month. And yeah, I mean, this was very obvious rotation out of high tech, high volatile names and more into a defensive play for this month, excluding excluding Chinese internet. That whole ETF and sector has been hot so far this year. Um, but if you kind of go over the what I like to call the wall of worries, we can sort of address some points that the markets are looking at that might be some headwind. Maybe for the next couple of weeks and of course for next couple of months. But I think the biggest one right now is tariff drama. Is the impact of tariffs going to increase or decrease the economic growth, specifically the GDP? Earlier today, the Atlanta Fed decision, they came out and they reduced their GDP expectation by almost 3%. I'll have to post that chart later as well, but it's a very interesting thing. And they're, again, anticipating the tariffs to sort of slow down economic activity. This will always be something that we have to worry about and, just kind of look forward to and see how it is tackled. Along with tariff, we have to talk about inflation. Now will the tariffs and whatnot increase the inflation? And if that's the case, then, forget the rate cuts. Are we looking at potential rate hikes for this year? I think that's something that no one is really asking or questioning. And if you look at the unemployment data, so currently what's happening is that the private sector, specifically anything in the government, and the government workers, they're being offered buyouts, and that is going to increase the unemployment rate. You should not be surprised if you see an uptick in this upcoming NFP report, non-farm payroll report, this next Friday, because again, the current administration is offering buyouts, and they're offering people to walk out of their jobs for the government sector, right? So we should expect a tick in an uptick in unemployment, and I think that'll be talked about as well. But be surprised for that, or don't be surprised for that. So the weak earnings reactions, what I kind of noted for myself is that just the reactions from like the large caps, Microsoft, Google, Tesla, and now Nvidia yesterday, Apple, Amazon. It was just not a strong reaction. They sold off really drastically, and the outlooks. I think everyone is sort of increasing their capex spending to accommodate for any sort of AI plans, data centers, etc. So just not a very confident earnings outlook for this previous quarter, and maybe some more worry for the next quarter as well. But something that sort of I think stalled the market out as well. If you look, I'll show you in a later chart, but the Magnificent Seven ETF was about to break out and had a false breakout and reverted to the downside. And of course, with that, we saw that rotation out of tech, especially the past 2 weeks. This also was kind of in line with the seasonality play of end of February. Like I posted in the chart yesterday, last 2 weeks of February have been historically some of the worst, especially during the presidential, the first year. And even the first week of March is technically a little bit bearish, but we'll kind of see how that plays out. And then usually what happens, when you're mentioning all of this and you mentioned the housing market, the recession fears sort of start to pop up. But I think we're in a good spot for now. But this will always something. This is always something that happens whenever people are in panic, and of course, this will always sort of I want to say it's a bait click, but a lot of the news outlets will sort of use this as a means to get some viewerships and whatnot. But another thing to worry about, is the housing market. There's been a large increase of supply. Housing prices have increased drastically. Rent prices, mainly in I think isolated areas. If you looked in Florida, and especially Washington D.C. But this has always sort of been a worry for the past couple of years, and will it continue? And what's going to be the impact of the longer elevated interest rates with the housing market is something that should always be that is being talked about right now. And then of course my favorite is the AI bubble. Are we currently in an AI bubble? And uh, what should you avoid? What should you buy, etc. So there'll always be a wall of worries, and the market just has to kind of get past it, and it'll always address itself, and kind of play it out. Technically markets are always forward thinking, so any of the current sentiment could be reflected in the price action, which is sort of reflecting the next 3 to 6 months. But again, you always have to sort of take it as it goes. Going forward, so I'll be having a couple more educational videos out throughout the week, maybe at least once a week. For the next week, I'll have a video talking about, a must-have tool that you need for your trading. I won't mention it in this one, but it'll be a pretty good video that I think a lot of people underutilize, this specific tool. And I've mentioned it in some previous videos, but, I'll make a separate video on that. How to sort of build a diverse portfolio. I think after this month, a lot of people maybe realize they're a little bit overexposed. And so, how can you mitigate some of those risks and whatnot? And then, of course, I'll always do a couple of technical analysis videos. And eventually, I'll start getting into option videos, which will require a little bit more time and training. And maybe I can even do an in-person event for those who are interested in having a options trading class. So I'll get right into some charts. So drag. Okay, so if you look at S&P and if you kind of see where we bounced, I mentioned the gap. This is our last gap fill that we have, and we bounced almost perfectly. If you haven't watched my gap video, I would recommend watching that. It's a really good video, and it'll show you the importance of any upsides and downside gaps and how you should play those on an index and whatnot. So we found really strong support into the gap, and like I was saying, we were down almost more than 50 bips today, and then we had almost a 2% rally to close at the highs. Moving forward, I will watch these two major levels as 590 and 586.4, and roughly around these, doesn't have to be an exact mark, but it's just a point of reference. And especially for next up for March, I will be watching this 590s as support. Like I mentioned up here, we had a failed breakout higher, and price can violently reverse to the downside. Now we're sort of experiencing another failed breakout to the downside, and possibly we can start to see a larger rally form. But if these levels start to fail, and if we can't reclaim this previous channel, then this 569 area should definitely be watched as a major support. And of course, when we get there, I'll hopefully have some more videos and inside out before that. But just something to watch for this upcoming weeks and month. If you look at Qs, um, for Nasdaq, we do need to reclaim this 510, or almost a 511 mark. And I think this will sort of dictate where the market will go. Technically the rally or the drop did start with the Nasdaq. We dropped almost 8% from the highs. So we definitely need to recapture this 511 level as well as this previous channel that we were creating. And I think that'll at least help us get back into some bullish momentum. And of course, like I said, we had this failed breakout. We had the failed breakout to the upside, reverted lower. Now we're having a failed breakdown to the downside, and prices, trying to mean revert. back to a more convenient spot, which hopefully it reclaims its 511 level. And then for 2025, as I mentioned in the previous video, you have this really strong support, almost at 490 and whatnot. So I'll just cover some stocks really quick. If you go over Tesla, so Tesla, very violent sell-off, and we actually found really strong support in this previous area as well as the bottom of this trend line. If you kind of zoom in, you can see we undercut the trend line a little bit and we held this previous gap area that happened. So, hopefully we can start to rally a little bit higher, at least base out. Oh, sorry, it wasn't a gap. It was just a previous pivot as well. And hopefully, we can kind of start to see a rally come out of the stock. I do believe they have some AI event coming up, or robotics event, AI event coming up, and maybe that'll be a catalyst to kind of buy into the news. If you look at, see, sorry about that. So I wanted to show this chart for again on Thinkorswim. You can sort of make a custom chart. So I had all the mega cap names. So I did note around here we did try to break out. This was basically beginning of January, or sorry, and beginning of February, failed breakout, and now we sort of went to the downside over here. So. Again, I think we should start to, it really just depends on, individual stocks at that point, but we should start to hopefully bottom out and see some rally. If you look at Microsoft, Microsoft did try to sort of break the bottom of the range and saw a pretty good snapback and back into the range, but just something you have to constantly monitor and see. So hopefully, we'll be able to rally for next week. So really quick, I'll go over this oscillator that I always sort of post. Yesterday, I did see or post that we were close to the oversold area, and of course today we're getting even closer. So honestly, I was hoping for a little bit of a red day, so this could be in the complete oversold, and this would have provided a really strong bounce. But it's okay. This is still a good area to sort of look to buy and accumulate some positions and whatnot. I'll go over this chart again. I showed it yesterday, but the last couple weeks of February have always historically been very volatile and a bad period for the markets as well. So again, the trend played out, and we'll have to see where March sort of leads us. If we go to the Fear and Greed Index, I think yesterday it was at 18, now it's at 20. So even staying in the extreme fear, I think this would still be again, I think people are a little bit more fearful with this particular drop, so we could probably see a faster mean reversion to the upside. Just something that you have to sort of pay attention to as long as we reclaim some levels. But what was more interesting to me is that if you look at the overall market breadth, it wasn't too bad. During this whole down period, you can see that there's still, most of the damage, if you look at it from a 360 view, was done in the technology sector, specifically Magnificent Seven, and things like that. But there's healthy rotations into other sectors, which is pretty good. To sort of see that, hey, it wasn't a full market sell-off. If you were diversified in the right places, you did pretty well and whatnot. And then lastly, I'll cover this chart. So if you go to this website, longtermtrends.net, it's actually a really good website. They have a lot of good charts and sort of comparisons and whatnot. So if you look at the S&P PE ratio, kind of came down a little bit. It's around 20, or the average S&P PE ratio now it's around 29.32. But if you look at the Schiller PE ratio, which is using the average for the previous earnings for the past 10 years, we were right around the highs of basically November and October of 2022, or sorry, 2021. So, a little bit of a cautionary tale here, and I think maybe it wouldn't be a bad time to even just look into more defensive stocks and see what happens for the next couple weeks and whatnot. Like I said, this website is a fantastic tool. They have a lot of great charts, some real estate comparisons, and just, some pretty good ratios and whatnot. Um, that's basically all I have for today. Again, a very volatile session in a week, and hopefully we can find some stability for the next couple of weeks and have a good March. If you do have any video requests or want me to cover anything, please let me know. You can either comment or just leave a reply on any of the WhatsApp posts, and I can definitely look into that. And also, as always, if you want to add your friends or family members or network, that group is open. It's not a closed group by any means, so you will have access to, again, invite individuals and whatnot. Um, that's basically it. I hope you have a good rest of the weekend.